This is a quick little video on, Microsoft that I caught 156 on yesterday. I did not trade today. This is my first video with my camera. I'm literally using my phone camera. I kind of look like a mess. My hair is a mess. It's been a long day. I just came from the gym. We hit chest and back today. But yeah, I'm a little bit of a mess right now. I got some fruit. We got some grapes, honey, strawberries, and blueberries. Some carbs, some natural carbs, natural sugar, rather. I don't know if there's a thing. I don't know if natural carbs is a thing. I think there's just carbs, but I'm not a nutritionist, so don't take it from me. Literally using my AirPods. And yeah. Okay, so Microsoft, I'm looking at SPY for some reason. I did not trade today. I didn't like anything today that I saw, and we'll get into that later. But real quick, let's hit a trade recap on Microsoft. So, I need to go to Wednesday. Today is Thursday. I did not record this yesterday, but I was like, I'll do one today, why not? So the first thing I like to look at is the 4 hour. Let me get rid of this stuff. Why am I tweaked? Wednesday. Why the hell am I? Okay. Let's go to, 4 a.m. I go to the 8 a.m. candle. So, I just accidentally went way too far. Bear with me, I'm literally it's my first time recording on a thing. And I'm just doing this raw, no cuts, and just straight up. But let's get right into this trade. So, Wednesday, first thing I saw, I always like to check the economic events. I saw that Wednesday we had ADP at 8:15, non-farm employment change. I obviously don't trade pre-market, I trade options, so I don't really care about that. I do like to look at like the data highs and lows, usually just to see how price reacts at the low and the high of the data candle, which is just the time that the economic event happens. You could do on the 5, 15 minute. Those are the main two that I look at. But we didn't really have any news until 4 p.m., which is post-market. I only really trade 9:30 to 11 right now. Sometimes PM session I look, but as you can see, Wednesday, April 2nd, we have no news during the market. So I could trade right out the gate. I like to let the morning volatility chill out a little bit. I don't like to take a trade at 9:30, but 9:45 is good enough for me. 9:45, 9:40, whatever. Okay. Microsoft. So 4 a.m. candle, 8 a.m. What did I see? So the 4 hour I took calls on Microsoft. The 4 hour I saw was bullish because we broke structure, which is just a closure above this high. This is a break, right? Little arrow pointing at this candle. See how the body of it closes above this high? This is a swing high because it is the highest point in this 3 candle formation. It's like a peak in price, like it's a very important relative level essentially, and you get a closure above it. It's a very good bullish confirmation. Bullish meaning upside. So so we made a higher high. Obviously price went higher. This is a high, this is a higher high. We actually went higher than that. Broke structure, that already is enough for me to say we're bullish despite whatever the hell this is. 4 hour, bullish, great. 1 hour, I also like to see either bullish or sideways. I don't like to see a 1 hour bearish and the 4 hour bullish. To me, there's like no trade there. You can still take a trade. It's just not as strong for me as a confluence to look at. Or I guess it's just a little more iffy. Like I like to really, really have a setup that I look at and I'm like, all right, everything looks perfect. I don't like to look at a setup and be like, if I lose this, I'll know why. Like I don't want to know why. If I lose it, I want it to be because of probability, not because I know why. I don't ever look at a trade and want to take it if I know that I could lose because of something specifically, right? Because you can always lose in trading. I just want my losses to be probability, not a systematic error, not something I could have and should have seen if I was objective and missed, or I just didn't pay attention to that I distorted. That's besides the point. So, 7 a.m., April 2nd. 8 a.m. Okay, I keep accidentally doing that. But as you can see, 8 a.m. All right, so I saw a sweep out this low. This is a swing low. It's important. There's a lot of liquidity here. There's a lot of orders here that push price up. So we saw market take out this low when we got this sweep here. Now, I think I entered somewhere in here, or maybe it was the next candle. Actually, I think it was the next candle because I waited for the break of structure. So, right, so the 1 hour here actually was bearish. So I wasn't going to take this trade because we broke structure here. Look, this is a swing low. We closed below it. So it's a break of structure, and we made a lower low. Even here, from this low to this swing low. That's a lower low. So I don't want to trade that. So I'm waiting to see a break of structure and a higher high, which is exactly what we get at 9 a.m. So I actually took the pullback, I think, on the next candle because I waited for this candle to close. So 9 a.m., we break structure above this high. This is a swing high, important level. We close. We sweep out this low. This is sell side liquidity. Liquidity, again, just refers to orders in the market. Money sitting in the market that institutional traders will go to purposefully. They'll drive price there so that they can take a larger position because they can't just take a hundreds of millions of dollars position anywhere in the market because they won't get a good fill and a good entry. Their risk to reward will be terrible. The market will just like tweak out, at least from my understanding. So they will drive it to where there's more orders, more sellers on the other side. There has to be a buyer and a seller. So they'll drive price to where there's more people on the other side of the transaction, right? So that way they can sell or buy a massive position and not just a little bit. So this is a sweep of liquidity. When you see price come down, immediately you have a crazy, what moves the market? Buying and selling. You see this swing low, come all the way down here, and then boom, massive displacement higher. Like that's a textbook liquidity sweep. That's what ICT traders call it. Whatever you want to call it, stop hunt, doesn't matter, same thing. It just works. I don't even know. Maybe the institutions they're like think we're all stupid, but it works. So it works. People make money off this stuff, and I think I don't know, whatever. It's good. We close here on the 1 hour. We break structure. We make a higher high. So I'm bullish. Now I want to see a pullback. So on the 5 minute, I know if we close on the hour, we definitely broke structure on the 5 minute. You can clearly see this is insane. This is a swing high in the 5 minute. I always look for the break of structure. That's exactly what we get. We break this high. So now we're super duper bullish. This looks really good. Next thing I need to see is a pullback because I don't want to take this trade in a terrible, I like to have a good risk reward. I want to take my trade somewhere that's precise, somewhere that's going to give me the best entry I can get. I don't want to just take it at the first. I like to wait for a retest of a fair value gap. I don't want to just take it at the first one. Although it can absolutely work, it won't give me as good as a risk to reward. Why? Because in hindsight, okay, look, this is a premium. This is a discount. This is the recent range. Why? This is a swing low. This is a swing high. So this is the recent price leg on the 5 minute. Price leg is just like a swing low to a swing high, right? So this is the recent range. We have a discount. This is where it's cheaper for buyers to get in. We have a premium. This is where it's, I guess, cheaper. It's technically more expensive for sellers to sell, which is beneficial to them, but it's like the same thing as a discount just for sellers, right? You could sell or you could buy. You can go short, you can go long, whatever. We're not getting into that today. Besides that, we have a fair value gap right here. Fair value gap is just an imbalance in the market. You see this entire body. We have a wick here, we have a wick here. They never come down. It's not like this. It's not like that, right? In this case, see if I made this a regular line, this looks like a wick. This would just be, there would be no imbalance in the market because price pulled back and gave sellers a chance to step in, the same as buyers, right? I just got an email. I'm literally recording this on my phone. But we have a fair value gap because we never pulled back in this range. It was just shot up. We have an imbalance in the market, right? So the market will like to pull back. There'll be orders resting here. It'll fill orders and go higher, right? I don't like to just take the first fair value gap because if I do, let's just say I take the middle of the fair value gap, like, yeah, this is still good because we got like a really good displacement higher. And I could say, all right, stop below this one. But I like to say stop or entry right at EQ or below it. Stop loss below this fair value gap. In this case, I think it was like below this fair value gap and because we have one right here. Oh, I'm geeked. I don't even know what time it is. We have one right here. And then we have, I think, a 3-minute swing low is what I was looking at. I don't know exactly. I entered right at EQ. And I think actually I put my stop down here because it was a 2-minute fair value gap there. It was something like this. And I was targeting this high. This is, yeah, I was targeting, I think, this high, unless we went a little higher. I'm not sure. Yeah, I think right here we get a nice pullback. As you can see, we really get a push down, but we never broke structure down. Never made a swing low here. It wasn't like a, there wasn't really, I was very bullish here. As you can see, like literally right at my entry price, just like I had a great move up. My first target was this because this is a supply zone. I like to sell at any potential reversal point just to manage my risk the best that I can. A big thing is just managing your risk. You need to know how to do that. But I mean, I'll just draw it out as a supply. This was my first take profit right here, this supply zone. This entire green candle to this massive downside move. This is, I mean, you could really look at this whole thing, but usually in ICT trading, you'll look at the previous candle that was like in a bearish scenario. If you're looking at a supply zone, you look at the most recent upside candle before a really big downside displacement. This is a displacement. It's a huge move down, and we have this here. So the idea is that there's market makers accumulating positions here, and this is an accumulation. Like if you look even on the 3-minute, you can see it's probably just moving sideways, or even the 1-minute, you can see price is just moving sideways. So it's kind of like sideways movement is called accumulation or consolidation. It's all the same thing, but essentially it's orders compiling here to have a big move down or up, right? So in this case, it's a supply zone. It can act as a potential resistance. So this is where I want to take profit first, just to be conservative. So I took my first profit here. I only had 2 contracts. I'm trading with a small size, focused on building the skill, not just spamming trades to make money, right? Because that's how you get cooked. You have to be very, very disciplined with trading and just stick to your rules, not just look to make money when you're hopping in the charts. You need to really focus on your performance and sticking to your edge in the market, as well as respecting your rules and your risk management and just keeping a clear mind. We'll get into that. So first take profit was here. Second take profit. So I could have, like I said, this was my second take profit all the way up here. I was targeting this high, this buy side liquidity. I was targeting this high. There's liquidity up here, and market is drawn to liquidity. It seeks it, targets it. Now, this is the thing. We made a swing high here when we closed this candle, and I was like, all right, maybe I could take profit here if I want. But I was really bullish, so I was like, okay, you know what? I'm going to hold until it hits this because I really did think it was going to hit it. And it ended up hitting it, just not when I wanted it to, which you can't make the market do anything. It's not about what you want, right? Price ends up just chopping. I had to, at this point, I had to go to work. I had to go to my job. So, and I get off I don't trade after 11. If I'm in a trade, I'll let it do its thing. And I just manage it. But I won't get into a trade after 11. Like if it's 11 and I'm not in a trade, I just get off. Or earlier if the market's not giving me anything. That's what I did today. But yeah, so as you can see, I was like, all right, we made a new high. I have to go to work. I'm literally just going to take profit at the next swing high we make. We made one here. I'm like, all right, I'll take profit. We go up there. We went very close to it. And then we made a new one. I was like, all right, I'll take profit right there. And then we just chopped. After I saw, when does it come? Right here. We broke structure. We broke structure down. I told myself, I was like, okay, I'm going to lock in profits if we close a 5-minute candle below this low. This right here is a break of structure because this is a swing low. We close below it. What does that tell me? Okay, maybe this trade can now start going lower. So I manage my risk and I take profits because why would I let a trade all the way up here go all the way down, potentially to my stop loss, which I did lift, I think, to like right below this low around here. But still, if you end up in the green, take it. Do not just let it go all the way to red. Manage your risk. You know what I mean? Don't be a buy. So I took profits here, and at this point I was literally at my job, and it ended up in the next 15 minutes just hitting my initial TP. That's trading. Did I get mad or upset about it? No. I ended up, the risk reward wasn't too great. I took my first profit there. My second one right there, it's the mid risk to reward, but I managed my risk, right? The initial risk to reward was this, like a 2.6, but I managed my risk, and that's the most important thing. You have to manage your risk in trading. You can't get greedy, right? You can't, like, I don't even look at the money, how much I'm up. I just look at the percent, or I just hover over sell, just to be ready and prepared. But you can't get greedy and just think, oh, I just want to hit this, I just want to hit a crazy trade. You have to utilize what the market's giving you or stay away. Like today. Today, I hopped on the charts, did my pre-market analysis, waited, looked through all my assets. I have them all right here. These are the ones I look at: QQQ, IWM, SPY, Mag7. We have a couple other ones that are high liquid. I like to look at anything that's like liquid. I just look at, and I don't see any clean setup for me. I just don't take it. I just don't trade, because I don't need to trade every day. To be a profitable trader, you don't have to trade every day. You have to know when to get off. You don't need to force trades. You don't need to take trades that aren't there. When you take a trade like this was so easy for me to see it. Like, it was just the market putting it in my face, like, yo, here, take this trade. Like, that is a trade you want to take, when the market's just like slapping you in the face with it. Ignore my energy levels. I took a Celsius before this. I drank a Celsius before this. I'm a little like, a little jittery. But, yeah, I had a Celsius. It's pretty good. They got some weird flavors, man. I don't have Celsius that often. I'm not much of a pre-workout person. But here and there, it's nice, especially before chest day. It's really nice. But yeah, so we got a closure down. This is where I took profit. Manage your risk. If you see bearish confirmation, this is bearish confirmation. I'm like, all right, after this chop, like, if I was really expecting this trade to hit, I would have seen a much quicker moves to my take profits, because I was very confident in this trade. But again, you can't force these things. You have to learn how to make the best of what the market gives you and what it doesn't. I didn't trade today. I didn't see anything I didn't like, so I didn't trade. Only need two to three trades a week to be literally a millionaire once you're consistently profitable and you have a bigger size. You don't need to take 10 trades a week, 5 trades a week, not even 5 trades a week. You don't have to, right? The higher quality your system or your edge in the market, most likely the less trades you're going to get. But when you do catch a trade and it's just one thing after another, just aligns, confluence, just like boom, right there. The market's just giving you information. You're just like, oh, this is light. Another thing I like to look for, I don't want to see opposing confluences. And to me, I define that as seeing a sweep at a POI, which is essentially what my system is. I don't like seeing my system against me. So in this case, I saw, okay, on the 4 hour, we never swept any highs. The 1 hour, we never swept any highs. I guess we swept this here, but this is after I was in the trade. But when I got in this trade, which was right here, this candle, we didn't sweep any relevant highs that I cared about. Like this high, I don't care about this. This is not a swing high. I don't care about this. I don't care about this. This is not a swing high. Even though this could be a supply zone right here, we have this upside candle, this downside move. We don't have the sweep. So this trade was perfect for me. There's no internal resistance. You just take the trade. So I could have probably made more. I could have definitely made more if I was in it. I could have made maybe 250, 350. But my point is, you're not going to catch those crazy trades every day with trading. You're not going to just be like, oh, I'm going to make money today. I'm going to go crazy. No, you're going to do the best you can according to your system. Manage your risk. Trade efficiently. If you trade, and it's all outcome, it's all probability. It's not, you don't control it. It's not your outcome that you control. Doesn't mean you can't make money with it, right? If you have a good edge in the market, you have a good probability and a good risk to reward, and you can respect your rules, then you can be profitable, right? So that's what it comes down to. Yeah. I'm not really used to recording videos like this. This is just doing it for the fun of it. Why not? Journal my journey. Sorry, I'm tweaked. Today's been a long day. I worked, got up early, went to work, traded, or didn't trade, but I was on the charts. Did work for trading, lifted. Now I'm about to go to practice. But still productive day, still doing good, right? Even if you don't trade. Not trading is still trading. You have to think of it like that. Not trading is still trading. It's still being productive. It's still being a consistently profitable trader. if you're choosing not to trade. Consistently profitable traders have to know when to not trade. You're not going to get on and every single day take a trade. Then you're just like, you're not, you know what I mean? You're not actually building good habits to become a successful trader. So this is just a quick little recap on Microsoft. Manage your risk. Let A+ setups come to you. It's going to scream at you when you see it, especially if you backtest it and you just practice it. You're going to see it just like that, and it's going to be no internal resistance. When you see your system play out or your edge in the market, a setup playing out, take it with confidence. Know what you're risking. Keep your risk good. Risk management is everything. Nothing is guaranteed. This is why you have to have a good risk to reward and a good edge, as well as just your mental clarity and discipline and focus in the market. Comes to market with a sound mind, and you will be successful. Right now I'm on that journey, but we're going to definitely get there. This is a really long trade recap, but do with it what you will. And yeah, best of luck to anyone that is in their journey, whatever it is. Maybe it's just like entrepreneurship as a whole. That's good. God bless and have a great day. Amen.